that you can download the videos. So I'm just curious, can you tell how to do it? Are you able to see how you can do it? I did not know that that was possible, but I don't know all the features that the software can do. There's a lot. There's a lot of things it can do that I don't know about. Only so many hours in a day. But I'm just curious if you can tell what you have to do. Now, for me, up on the top left near the logo 10-minute trades, there's 3 lines. When I click on those lines, it goes archives. One of the choices is archives and recordings. And that should allow you to download the recordings, I believe. They keep about 2 weeks worth, so that if there's a trade you're interested in seeing, if you missed it, you could possibly download it. So I thought that was a pretty good feature. It's on a little bit early. We'll start in a few minutes. I was watching the Bank of England. I really thought it would be a gigantic, instantaneous move. It was the exact opposite. It took a minute before it did anything. So I don't know. I think there's a mistake, which is no surprise, on investing.com. They've got a report that I don't think is taking place today. I don't think it changes anything, but I don't think it's taking place today. Personal spending and income. Let's take a look at FX Streets. See if they have it. They're pretty reliable. Okay, you should be able to hear me now, I hope. Testing 1 2 1 2. Let me know if you can hear me now. I don't know what happened. Frankly, I didn't do a single thing. Um, let's start over. So welcome everybody to the 10-Minute Trades Trade Room. The mic just shut off. No reason why. Sometimes things happen. My name is Lee Goldstein, Trading Director at 10-Minute Trades. I also want to welcome our YouTube friends. We're streaming. Remember that all trades we discuss are for educational purposes. It is possible to lose money trading futures, so trade carefully. And this is an unusual morning. Good morning, Ed. Good morning, everybody. So what we've got going here this morning is an abnormal amount of news. Now, one thing to understand is the consumer spending is not taking place. That's a mistake. That's a mistake. The retail inventories are there though, and the wholesale inventories are there. So look, you're dealing with a situation where it's not possible to test this kind of event because it doesn't happen this way where normally there's so much news at one time. So you're looking at a complete and total coin toss. If you want to trade this event, it's probably not recommended to trade it as an immediate trade. You might want to trade it after the news, after you see everything, all the results, and then you might get a trend in the market. Based on the news right now, the markets are up. So I mean, that's what you're dealing with, and let me show you why. I don't make this up. In March, right, last quarter, final GDP is probably the most interesting of the reports that we are watching this morning. And final GDP is the worst performing of all the GDP reports. You've got preliminary GDP, advanced GDP, final GDP. The preliminary is the first GD report of the quarter, and it's the most impactful. So it gives you your best response. When that data comes out, the market doesn't know what it is, and it's very impactful. It's usually a very good report to trade. Then you have advanced GDP. Advanced GDP is the second. It's sort of like a revision of the preliminary, but it still has good impact. And then your final GDP is sort of like revision after revision, and it usually has the most minor impact. Now, these markets, though, are different. If final GDP was trading by itself, or if it was trading just with the Thursday jobless unemployment claims, I would trade it live. I mean, I realized that there would be some risk there, but we trade a lot of reports simultaneously with the Thursday jobless claims. But today you've got, a lot of elephants in the room. You've got core durable goods, which is tradable by itself. You've got PCE prices, which is coming out. You've got retail inventories and wholesale inventories. Those numbers over the past year have actually been starting to be a little bit more responsive to the numbers than we've seen previously. So, if you are interested in trading this news this morning, know that the risk is not measurable. Well, no, let me put it this way. The risk is as high as the risk could be, because the results of the event are not measurable. They're not testable. They're not, you're not able to determine what might happen because it's so rare that you have so much news at one time that there's no way to pull up 3 or 4 events where this same exact thing happened or even anything close to it. So I think everybody understands that the way that we choose what we're going to trade is by finding events that are the same and checking their behavior. So how do you check the behavior of core durable goods with retail and wholesale inventories and Thursday jobless claims, final GDP, the whole bit, when they usually don't take place at the same time? The closest I could find was final GDP with Thursday jobless claims back in March. We traded it live, paid the price, because watch what happens. It just fills us to the long side at the top of the bracket by 1 tick, okay? If our bracket was a tiny bit bigger, it would have kept us out of the trade. And the news was late also. You'll watch, it does come out. And then gold completely reversed. And it was a very lousy trade, all right? And that wasn't even that much news. But in that particular case, also, everything came out late. So you could say, maybe we got filled early, but also there was mixed news. You had some positive GDP numbers, some negative GDP numbers. The pricing came out. The jobless claims were positive. So it was just an inconsistent result, which doesn't lead well. Doesn't wind up giving you an easy trade, which it didn't. And very honestly, it was a stop out. Then I went back to a year ago. You had final GDP with Thursday claims and durable goods. So this is a year ago. I don't know if I traded it live or not. I did. I was crazier in those days. No, we didn't. I didn't. I probably thought it was way too much news. And a year ago, remember, we were in the middle of the world crisis. It was quite a mess. So I did not trade it live. There was so much news, I put it on another chart, off another monitor. And interestingly enough, it jolted up, hit the first target. Let's see if it follows through. You could have gotten out with a profit if you traded multiple contracts. But look, I was not trading live, okay? Was not trading it live with gold. Now, this was a year ago. The markets are nothing similar to what they're like today. They don't even resemble today's markets. And then here was the news results. So you had mostly positive news except for the jobs. And you say, except for the jobs, back a year ago, that was a pretty important number. But it looks like gold, it goes up first and then it goes down. And, that's what happens on these types of reports when you have so much news. You don't get a follow through. So it hit the first target and then you didn't get follow through. So, I don't have to tell you that if you want to trade all of this news, then you are essentially just throwing a coin, heads or tails, because that's the kind of result you're going to get. There's no way to possibly know or predict what might happen. So that was a year ago. Then there was another report. So I tried to pull out reports that had a lot of news. November, there's a bit of news. Retail somewhat similar today in November. So that looks like a lot of news. Yep, lots of news in November. Very similar. The one time where it's real close to today, real close, if not looks exact almost. Now, I can't believe you had a 4-tick bracket. I mean, that's like, I don't know who was. I can't even comment. I can't even comment on the daily report on that date. It's beyond comprehension. The setup, it's like almost. I'm not even going to look at what happened. My guess would be a guaranteed stop out with that 4-tick bracket. That's a guaranteed stop out. Let's see. Did we even trade it? It's a little bit of a weird video. Okay, so a 4-tick bracket with 20 news reports is like saying, fill me before the news comes out. I can't believe that I traded it. And I traded it with the ES, which also, didn't look like that worked very well. But that was a bad trade. But, I don't know. Very honestly, folks, you can't, if you want to trade, someone has a car alarm problem. If you want to trade with all of these news events taking place, you might just write a check to your broker before the trade so that you could control your risk. I would not. This is not a family money trade, right? This is not a family money trade, to say the least. I mean, why would you? I don't know why you'd want to put yourself at risk. I really just don't know why you'd want to put yourself at that much risk. And what's funny is, it almost looks like gold worked that morning. So that date, just out of curiosity, that date was 11/25. I just want to take a peek, see if I have notes on that in my journal, going back to 11/25. Too much news to trade safely. Bracket should have been at least 8 with all that news, not 4. I definitely agree with that. Let me show you the report for today. Here it is. A bracket of 8. Even that is, you could use a bracket of 10 with all this news. Well, folks, I wouldn't trade this. Okay, it's just that simple. I wouldn't risk my daughter's money on this. So why would I risk your money, right? It's too much news. There's too much news. So you could, yes, we could test it as a breakout trade. There's no harm in doing that. You could look for an alternative method of trading, right? You could look for an alternative method of trading it. Does it happen enough that we need to look for an alternative method of trading. I'm not so sure that it's even worth the effort. We have enough reports that, if you want to take a little bit of extra risk, you could have traded oil yesterday. You could have traded, reports that aren't filled with so much uncertainty. So I don't, look, let's make believe that we don't know anything and we're a newbie trader and you just joined yesterday and you're crazy and you're going to trade live. I'm not, but I'm setting up a bracket of 8, a target of 8, a target of 15. Originally, when I woke up this morning, I was thinking trade one contract and go for 12 ticks. Or go for 12 ticks, because that's what the stop is. But then I looked at the last quarter and saw, even with less news, it traded rather poorly. We know that gold is challenging enough under normal conditions, right? Why do I want to damage my boss's account, an account that he is very interested in starting to do some more personal trading in? So I want to keep the most amount of money in there as I possibly can for him, even though I use it as a test account. Why would I want to, do something that I wouldn't do in my own account? So I can't, in good conscience, do it in his, okay? I really have to behave as if I'm trading my money all the time. I have to act like every trade that I take almost is a family money trade, unless I explain that I'm taking the trade for testing purposes or whatever reason. But I would not trade this much news. I just wouldn't. It's too much. You don't know, you have no idea what's going to happen. Now, like I said, if you're a discretionary trader, our software can be used by discretionary traders to set up all sorts of other ways of trading, and you can do that. And at some point, maybe we'll do that. You could do this would be a squeeze play kind of trade. I don't know if Mark is in here or not. I didn't look. I think he is. Mark uses a feature in our software called the squeeze play. It allows you to enter when you want to, when the market comes to you. And maybe at some point, I'll do more development, more trading. I'll put more trading time into that. But right now, at this current point in time, we're working on something called family money trades, and we're going to stay with it because it's working. So now that doesn't mean you can't learn about other ways to trade. So I'm interested possibly in squeeze plays at some point, but it's hard for me not to test the current setup because the current setup was sent out to everybody, right? This setup that I want to test, it was sent, and it was sent to trade. Now, I would, if you understand all the concepts of trading event trades, you could not take this trade live and expect a good outcome. You could take this trade live and not know what to expect. That's not what trading is all about for us. We often trade and expect a good outcome. And that's the best way to trade, right? I mean, what's funny about trading is even traders that are blowing out their account, the day that they're blowing out their account, probably every trade they're taking, they're expecting a good outcome, right? But we actually take some trades and really do expect a good outcome. And that's because we've tested the previous outcome on a similar setup. And it's been really good, or we wouldn't take the trade. So, that's just the way it is. Multiple news, I wouldn't do the breakouts. Yeah, I totally agree with you, Mark. I just want to test what was sent out. That's all I'm doing. I'm just testing what was sent out this morning. All right. What was sent out was a bracket of 8. Now, what I think should be done in a situation like this, there should be a warning on the report that risk is much higher because of the amount of reports. Okay, that's what I would do. I still journal everything, Mark. Everything gets journaled, even if the combo of news is unique. Now, it's not so unique that it didn't happen a year ago. The same thing happened a year ago, but you're probably dealing with a situation where it's so unique it only happens once a year. So for something that happens once a year, is it worth putting in a tremendous amount of time to even deal with it? No, I don't think so. I really don't think so. If it was a reliable expected behavior once a year, then I would put the time into it, because what could be better than something that happens once a year that's always great, or that's great 80% of the time? I have no problem with that. But yeah, this, as Mark is saying, this particular scenario seems like a sit on your hands and wait for a response kind of scenario. And that is what it is. So you could set up a secondary trade, right? Using, say, the squeeze play. And with the squeeze play, you could say, okay, I'll wait 2 ticks for the market to come to me. My 1-click look back bars are 1. And I'm going to trade gold with a target of 10 and a target of 20 ticks. I'm going to use an 18-tick stop. And the concept here is, if you use the squeeze play, make a note, GC squeeze. The concept is, if the fantastically large majority of news is good, then you would click the long 1-click long range button, 1-click range long. And if it breaks the bar that you're looking at by 2 ticks, it'll bring you in long. If all the news is negative, or a lot of it is negative, you could click the 1-click range short button. But I can't do anything until the breakout trade's over, okay? But that is something in our software that would let you trade situations that we might not normally trade because of too many events. It lets you set up different trades in a completely different manner. And that's because we've built a lot of features into our software. And so for a breakout, what Mark is saying, I think that's what he's saying, is about a breakout scenario. There's no way to test this. And we know that because it doesn't happen enough. You'd have to look back years, and it's no point in testing from years ago. The markets aren't the same anyway. So this is an event where you don't risk your money. because there's too many events. It's interesting. It's fascinating. If you have $1 million in your account, you love trading live, go for it. You can do whatever you want. Most people are looking, maybe to pay their mortgage, or they're looking to add to their, add some money to their monthly money, right? You can't, you just you want to try to trade. We say this a million times a week. You want to stick with reports that give you the best opportunity for a profit. It's just that simple. Trade the reports that give you the best opportunity for a profit. Why? What else is there to do for what we do? That's what we do. So that's what you want to do. In this kind of situation also, all the news probably won't even come out at the same time. So you'll get the possibility of a choppy result is always there also, right? So it just creates an unknown scenario. I mean, that's what you're dealing with, an unknown scenario. And, you want to protect your account so that you can trade the reports that you like. It's just that simple. It's not complicated. It's common sense, right? And I've learned the hard way. I've traded these reports live plenty of times. And I always wanted to cry in a corner. Now, look, you could get all the news agreeable today and a fantastic result. It doesn't mean you did the wrong thing by not trading. Okay? So right now, all the news is negative. Look at that. A lot of negative news. And looking for a burst, really, the job numbers are positive, though. Job numbers are positive. It's going to hit the first. Look at that. So there you go. There you go. Isn't that funny? It would have worked. It would have worked. The market kind of didn't really pay attention to the jobless numbers. If you look at those jobless numbers, they're pretty darn close. 3390, 3470. They're pretty darn close. Now, it's like I said, though, you can't crawl into a corner and torture yourself because it worked. You just can't. You just can't. If you have a large account and you don't mind taking a risk of 12 ticks, like I said, with one contract, you could have made 10 ticks on that report. But even though it worked, the right thing to do was to stand on the sidelines, because it's the right thing to do. Not even all the news shows up. You have, but I think what you're dealing with is you got a lot of the reports agreeable on the same direction. A lot of bad news. A lot of bad news can create a move in one direction. So that's a possible why things worked. Okay. I still unquestionably would put a note on any report that has this many events that risk is always higher when you're trading reports with this many events. Look at the change in direction. And this is what gold does in general anyway. Gold, lately, gold gave you what seemed to be a news move, and I'll show you the video. And then it's been following the market. The ES just saw this as negative because there was much more negative news than positive. News is still coming out, which, so you could have possibly traded an ES range trade, something of that sort. There are setups that can work in these types of events. Let's look at the video, because ironically, of course, there's people out there who'll say, boy, this trader and moderator, he's an idiot. He looks really stupid. Everything he said doesn't make any sense. It was the exact opposite of what he said. I really, I don't care what people think about me. I know from experience what the right thing to do is, what the wrong thing to do. Yes, I'll miss some trades that I'm sorry I missed. I won't spend 1 second lamenting the fact that I did not take this trade. Not 1 second. Because with all those events, there's no possible result that could have been relied on. It worked, yeah, and it's great that it worked, but no one knows why that worked. It certainly, did it work because there was a lot of negative news? Maybe, possible, but you can't lament the fact that you didn't trade it. You just can't, because it is what it is, and it doesn't matter. It's not going to happen that way. Maybe for another year. You might not see that result take place, or that much news, those many events in another year. So what's the point of even sweating it? You can't even think about it. You go on to the real stuff. So folks, I'll see if you're watching on YouTube, the lessons are just as important as the trading. So if you'd be kind enough, give us a like, and sign up for our channel. For the folks that are here, there's a lot of you here. If you'd be kind enough, let me post my link. I have a webinar Saturday, and I would love very much if you would sign up for it. I'd like to post the link, and if you'd be kind enough to sign up for my webinar on Saturday, if I can find the darn thing. Give me 1 second. Sign up for the webinar. There's a lot of people presenting. It should be interesting. I go on at 1:30 on Saturday. And whether you come or not, it really helps me out if you sign up. And here's the link. And I'll see everybody back here at 10 o'clock for natural gas. Okay. Now, what's interesting, so fine. So look at all the news. It all now is out. The ES is turning around. The market might want to go up today. You had a move up in gold that was tradable, but it really was just a coin toss. No way to know if there was any meaning whatsoever in the results. So you can't drive yourself crazy over not trading it. I'll see everybody at 10 o'clock. Let me double check the schedule, make sure I got it right. Yes, we'll be here at 10 for natural gas, and then we have a 7-year note family trade at 12:30. Okay? So I'll see everybody later. Take care, folks.